Good day everyone, welcome back to this channel. Today's video we are going to look at a simple strategy you can use by following a Fibonacci and point of interest like order blocks, fair value gaps, etc. So it's going to be a really simple video and really simple strategy. So with no further ado, let's jump straight to the video and then I'll show you how this works. Let's get to it. All right, so here you can see we have the strategy and there's a few examples that we are going to go through. First of all, I just want to explain how this strategy works. So when we have price action, for example, like this, we want to identify the highs and the lows, okay? The reason why we want to identify the highs and the lows, first, it's going to determine exactly where we are in the market. Are we in a bullish or are we in a bearish trend? And then as well, we're going to use this to draw our fib. So for example, let's say we want to identify this high and this low. You're going to draw your fib from this high to this low, and then you are going to identify the 50, 61, and 78 zero level, and we are going to mark that out. Then when we broke this low, then we're going to draw a new fib from this high to this low, and we are going to identify the Fibonacci level right over there. Same that we are going to do with here. We're going to draw the fib from this high to this low. We are going to identify the level right over here. And then as soon as price does not respect this level and we break, for example, here you can see price came down, didn't broke the low, but now we broke a high again. Then it's an indication that the market is shifting, that we're having a break of structure or market structure shift on the higher time frame. This is all on the higher time frame. Then we are going to mark the fib from this low to this high, and we are going to identify the levels, and then we are going to continue the trade. Again, fib levels from this low to this high, we're going to identify the levels, and we anticipate for price to come into the zone and then continue, and then again we draw out the levels till the market doesn't respect it anymore. Then we go the opposite way. So it's a really easy, simple strategy. So when market is inside of a level, okay, so when the market literally enters our point of interest, we want to go down to the lower time frame, okay? Lower time frame. When we go to the lower time frame, we want to wait for this to happen. We want to wait for a liquidity sweep, a market structure shift, and then again, we can draw our fib, and we're going to identify the levels, and then we are going to enter our trade on the lower time frame inside of this big time frame POI, and then we are going to target the next high or the next low. So let's quickly break this down. Let's look at some of the examples. Let's just delete this, and then we can go through it. So the strategy is step number one. We want to wait for the higher time frame, high and low, to form. We are going to draw our fib from the one point to another. So that's the high or the low. We want to mark out your zone from the 50 to the 78% level on the fib. We want to go down to the lower time frames, and then we're going to repeat the process and enter from a POI example. This is your order blocks, breaker blocks, fair value gaps, inverse fair value gaps, and so forth. So before you ask me, here is my fib settings. Please pause the video here and then take a screenshot or write it down. This is my standard fib settings. Here you can see the fib on the left, and these are the settings that I'm using for the fib. So pause the video, there you go. All right, so let's look at example one. So you can see right over here, we are on NASDAQ right over here, and we have, let's just get the pen right over here. Let's change the color. So you can clearly see we have highs, lows, highs, lows, highs, and lows, right? So this is how we identify. This is how it looks on the market. High, low, high, low, high, low. So now what we did from the low that broke this high, right? That this high was this low right over here. So we draw our fib from this low to this high. Just change this, make it a little bit thinner. Let's make it a different color. Let's make it blue. You can see 50, 61, and 78.6. There's my level. And I draw it out with a little box so you can delete the fib if you want to. So we want price to come into this level. So here you can see price made this high. So now we want to wait for price to enter this level, and we are going to look for all the confirmations inside of this level right over here. This was on the 1 hour time frame, as you can see right over there. So let's go. So now we are on the 1 minute actually. So let's just see here this liquidity that was made right over there, right? This low right over here. It's this liquidity line right over here. So liquidity has been taken. We inside of this level. We had a nice market structure shift on the 1 minute right over here. We have a fair value gap that's became a inverse fair value gap right over here. So price came up. So now you can even draw your fib from this low to this high, and you'll see this will be in your 50% to 78% zone. Price came in to the inverse fair value gap that's actually overlapping with a fair value gap. Price came in, we tapped ourselves in, and then where will we target? We will target the next high. That's right, that's resting right over there. So you can enter your trade, and then as you can see, price went all the way up. Let's look at example 2. So here's another chart, so you can clearly see we have our lows, highs, lows, highs. Next thing that we want to do, we want to draw our fib actually from this low to this high. We're going to draw our fib. There you can see, and we mark out our 50% zone till the 78. So we want to wait for price to enter the zone. Then we are going to go to the lower time frame, and then we are going to get our entry right over there. So when we are on this time frame, we can clearly see there's a nice liquidity resting over there. We have a fair value gap. Sorry, not a fair value gap. There's the fair value gap inside of there. And then inside of that fair value gap, there's a nice level of liquidity right over here. So now we want to wait for price to enter, and then we're going to take our trade, and we are going to target the next level of liquidity. That would be the high right over here. So let's see, price came into our zone. We entered all of these areas right over here. This is still on the 1 hour. So let's go down to the 1 minute again. So we are inside of the higher POI. There's an internal level of liquidity that's being created. We have a market structure shift. Why this one? This is the high that was created that took out all of this liquidity resting right over here, and also this low. So as you can see, price literally wicked below this over here. Price pushed up. We draw our fib from this low to this high. Let's mark it in a different color. So price came into our zone, our 50% or 78. Right over here, we have small liquidity resting right over there as well. And then as you can see, price came down, entered our level. There's a bunch of fair value gaps resting right over here. And we have let's just zoom in. We have a nice small market structure shift from this low to this high. You can draw your fib from there, and then there's an order block level there. There's an inverse fair value gap level there. So there's a bunch of confluences right over here to enter your trade right over here if you did not enter your trade right over there, and then price went all the way up. So there you go, everyone. Nice and simple, easy strategy to follow. Go back test it yourself. Let me know in the comments what you think and if you tried this yourself, and then we'll see you in the next video.